Let's talk about another parameter or odd enhancer that will help us validate a level. And this one is called we can call it the arrival at the level, how price arrives at the original potential imbalance that was created on the way up or down. We have several things we have to take into account here. The strong arrival into a level with ERC candles, extended range candles, is best for set and forget. It means there is a lot of emotion and granularity, I will explain this, on the way to the opposing zone. And also, basing on the way to a level is not a good sign. It means it's not an emotional movement, and it removes profit margin. Okay, so let's take a look at this. Strong arrival and the basing. We've got this level over here. Okay, so when we've got a strong arrival on the move on the way down here, okay, here, that means that there were a lot of sellers there, emotional trading, that and these strong ERC candles there or here, okay, or here in the weekly there, those candles, those are guys on traders trading on the breakout. I mean, they are breaking out, breaking out, breaking out. So the stop losses are being scattered all the way over here. Okay, same here on this area. There is granularity there. That is that it is filled with gaps. Even if you don't see the gaps, it's like when you look at your hands, you see a tangible object or like your hand and fingers. You touch it, you can feel it. But then if you look through to your hand through a microscope, you will see that it is just emptiness. It's made of neutrons, electrons, protons, quarks, or whatever the stuff the hand is made of. Okay, so this is what we call granularity and the emotional trading. This candle, I mean, this is not sustained. The stronger the departure we have on the stronger the departure, on the stronger the of the level, the easier will be for price to go all the way back to the origin of the move, because this is not a non-emotional trading. This is not an efficient rally, because this is just not possible. I mean, this is not sustainable. So here on the way up, we've got a lot of breakout traders. Myself was there and all that. So and once we get to a higher time frame area there, we are happy with our profits. Now price is too expensive, and then we sell our items, and then price drops. This is take profits, because a higher time frame area, this is a monthly area, all-time high. You see, and the price is just too high. So investors tend to get rid of their investments because they are too high, and they can get a better price for their items. In this case, Aussie. Okay, so when we have these strong candles and we have a strong arrival at the level with no basing in the middle, we've got this is great. Why? Because we've got a lot of room until we reach the area where it pays before. We need to have profit margin. So imagine we take our weekly area, valid area of demand there. Do we have profit margin? Well, more or less 3 to 1. Okay. So on the daily, when price rallies from there, as you can see, this is all emotional trading. On the lower time frame here, we will see a lot of CPs and all that on the lower time frames. Let's take a look at the 4-hour, for example. Here, CP. Okay, look at this. A lot of all this trading on the zone and all that. So when price drops down, all this is emotional trading. I mean, this is people breaking out and investors and all that. This is emotional trading. This is not thought. I mean, thought out. This is not planned. This is emotional trading. Oh, hey, I'm missing that trade. I'm breakout, 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 and then we take those breakouts. Though these areas are like, if we take a look at the also the on the 1 hour. Oops, I think I didn't have history there. So let me take a look at the 4-hour here, and then the 1 hour should be here, over there. This is the origin of the whole move. Look at that move, incredible. Okay, if price drops into that area, then that's great. But when the market dynamics are with me, not when a weekly area of supply or monthly area of supply is in control. This is the break, the emotion. Okay, this is why this is called emotional trading, or I call it emotional trading. Okay. Oh, let me see here. These. Okay. This is great. Breakout trading, etc., etc., etc. So the people that got on that trade emotionally, okay, at the breakout of a higher time frame area, all that, the emotions and the market dynamics will have changed when price hits a monthly area of supply and now drops down there. Okay, this is just a level out of nowhere, as you can see there. Let me draw it on the trader platform. Oops, like that. This is on the 1 hour. Now let's switch to the 4 hour. Okay, so that level you've got there was great on the way up, but now that the dynamics have changed on the 1 hour, 4 hour, and the daily, it's not good to take along there because the emotions that allowed the traders, the investors to take along there are not there anymore. Because many things have happened. There may be the interest rates and many other things have happened in the markets on the Aussie and then the yen because maybe the Bank of Japan did something. So these are levels that are out of nowhere, in the middle of nowhere, and they are not even looked at by big investors. Big investors look at this, okay, big picture, okay, monthly areas, these areas. They don't look at those little levels, okay. So this is why using the multiple time frame analysis and the sequence rules and the realignment rules, it will allow us to detect which is the locate, which is the highest time frame out of alignment, and we will have to wait one higher time frame there in order to go long. Okay, so basing is the arrival into the zone is very important. So when you look now at that level, look at the level on the daily there, on the 4 hour there, okay, right there. When you look here to the right, look at this. We have a drop base, drop base, drop base, drop base, basing all the way down, and we are removing profit margin because from here to here we've got like 40 pips, and to the proximal line we've got like 80 pips. We have 2 to 1. We want at least 3 to 1 profit margin, and we are at 1 more hour in order to have some wiggle room to exit the trade before it reaches the level. So this is not a valid level on the 4 hour because we have nothing. We have the departure, the arrival is good, but it is basing, okay, basing right above the level. So those both of them are combined, the arrival and the basing, okay. So if it is dropping and basing, dropping, basing, dropping, basing, that is a very structured and non-emotional type of trading. This is created by robots and institutions. Okay, this is not like that. This is just breakout traders, news trading, whatever happens, and then it creates a lot of volatility, and there are not enough buyers to fill the orders, and buy the beats here, exhausted, and then we rally. Sorry, the beats not. Otherwise, the beats not the offers. So price rallies and rallies and rallies and rallies, and all these areas over here are scattered with plenty of stop losses over the way there. Stop losses, stop losses, stop losses everywhere. So when the price drops after a higher time frame area has been hit, these stop losses will be hit. And the stop losses of a buy order are sell orders, so it will help price to drop even more. Okay, so this is emotional trading versus non-emotional trading. This is a very structured drop. This is thought. I mean, this is pre-planned. This is not emotional. Okay, this is when you look at the daily, and this is emotional. This is emotional. A lot of ERC candle with no pullback and all that. This is emotional. Okay, So we have to take into account that. So when this area of the supply here on the daily drops into that daily area of demand nested at the proximal line of the weekly area of demand, okay, here, tested already, then what this is doing is that we don't have profit margin from here to here. If our entry time frame is the daily, we have nothing. We don't have profit margin because this is a strong level. Price will probably react to that area and then drop. Then we'll probably do like that. Okay, so this is removing our profit margin. So the arrival into the level, if we hadn't had, okay, if we hadn't had this level in the middle, okay, then we would have a lot of profit margin until we reach that area over there. So taking along here would be nice, okay? But now we don't have profit margin. Price could start ranging and ranging and ranging, and then maybe creating another valley there, peak, sorry, then connected this trend line, and only after the trend line break we would be able to go along maybe over there. Okay, so this is how the levels and the trend lines are combined. We have seen that on other videos. So the stronger arrival into the level, the stronger the arrival is, the better. But if we have basing above our entry, this is not a good thing. If we have basing with a lot of trading like here, okay, this is great because we were in an uptrend on the weekly, okay, here, we were there in an uptrend. Price reach a weekly area of demand here, and a lot of trading. There's another odds enhancer we have taken a look before. So this level has got lower probability. So since it has lower probability as per our scoring, then we can start taking longs. Okay, and after the trend line is broken, we've got more possibilities of rallying. The same here. Just copy and paste this, but this is a lot of trading in the zone, basing. Okay, this is not removing profit margin really because a lot of trading and the biggest time frame was in an uptrend. Now we are in consolidation, remember? Okay, on the weekly here. So now we have to analyze all this and make a decision based on the arrival into the level and all that. But if we want to set and forget our trade, I cannot say, hey, I'm gonna take a trade there. I don't care what happens. I do care. Why now? Why? Because we have hit an opposing area of demand on the weekly. Okay, and we have also hit an ascending trend line on the monthly. So this is not a type of trade for setting and forgetting. Why? Because I wouldn't forget about it. I would be worried that this level would not work because we are located in an area which is not higher odds. We are confluencing with the monthly ascending trend line. We are consolidating on the weekly. We are bouncing from a non-fresh area of demand on the weekly, but weekly respected. And on the daily, we are also bouncing from the origin of the whole move up. So a CP low in the curve, okay, low after many CPs have been created as we discussed already on one of the small videos. Okay. Best at the beginning of the move, low odds if prices overextend, you're too high or low in the curve. The higher the lower in the curve, the lower the probability. So this is lower probability. Can it work? Yes, but low probability. So this is how we apply all these rules, okay, of these odds enhancers, variables, parameters, whatever you're gonna call them, and you have to be very aware of them. If you are setting or forgetting the trades, as I normally do, I don't want basing above my entry. Okay, I don't want any of that. I want a strong arrival, but I'm not looking at the arrival because I won't be in front of the computer. So I want to make sure that it goes with a bigger picture trend. Why? Because I'm not bigger picture trend because I'm not looking at the computer. I don't want to look at it. I just want to set my trade. Like here, for example, I had a trade, a nice trade over there. Trend line was down, etc. So I took this short over here, okay, and then I took the breakout short over there, pre-CP here. So trend that was down, so I knew that the weekly area of demand hadn't been hit, and I still had this profit margin from here to here. and this level is like 62. From here to here, I had like 380, enough room for a 5-to-1 or more. So I took the trade based on that. But now that the weekly area of demand is in control, I don't have profit margin. Okay, so this is not a set and forget level. This is a set and regret level. Okay, you have to make a difference there. Okay, but don't be overwhelmed by all this and by these kind of exceptions. You will see these levels work many times, and then you will say, why didn't I take them? So when you stop thinking about that, then you will have better trades for sure. This is why you have to set and forget and not set and regret. Okay, so important then the arrival, no basing, okay, ERC candles, okay, because these levels they are emotional. These ERC candles are emotional candles with a lot of stop losses and granularity in the middle, with intermediate time frame levels there that will be consumed on the way down when a higher time frame area is removed. So it's in control. Sorry. So bear that in mind. Okay.